Hello, my name is Rob Boone and I'd like to welcome you to this video tutorial that will explain how to understand GST. It will assist you to understand what to report and what not to report on the BAS return when reporting GST. As a trainer in bookkeeping and accounting, I am constantly seeing GST codes applied incorrectly, and to make matters worse, there is so much conflicting information posted out there on the internet. So what about the accountant? Surely they'd know what to do and would be able to guide you. Well, some do. But the reality, unfortunately, is that there is a lot of misinformation provided by accountants as well, some of which, I'm sure, stems from the fact that they do not have the time nor the inclination to try to explain it. So will often just tell the bookkeeper to code it with their chosen code for the item. What I aim to do in this video is provide you with the knowledge and the skills to determine what the code should be and apply it to your account so that the transactions are coded correctly every time. And you have the confidence to know that it is correct. In this tutorial, we will seek to understand what is a taxable supply. We will look at GST in its purest and most uncomplicated form. We'll consider the GST exemptions from the GST Act of 1999, what these exemptions really mean, how GST codes change as a result of legislative exemptions. This training video will attempt to take the complexity out of the Act for the bookkeeper, discussing the issues in simplified terms. The first thing to establish, though, is what is GST. So GST is the legislative imposition of a tax on the supply of all goods and services in Australia at the rate of 10%, with the provision for some forms of exemption on this tax under the same legislation. The second point that needs to be made is that GST is not paid by the business. Only the end user of the goods or services pays GST, and that is you and I, the consumer. The third step is to imagine that there was a pure GST system in place where there were no exemptions of any kind on any form of goods or services supplied, regardless of what is supplied and to whom it is supplied. In this case, there would be a need for only two tax codes. The first would be NT, non-taxable, or if you like, out of scope of GST, for those items that are not the supply of goods or services, and therefore would not be captured by a goods and services tax. The second would be GST, for those items that are the supply of goods and services. Okay, so let's take a look at some examples. A transfer of cash is not the supply of either goods or services, and therefore would be out of scope of the GST. The purchase of a photocopier is goods, so would attract GST. Superannuation contributions are not the supply of either goods or services, and therefore would be out of scope of the GST. Advertising is a service, so would attract the GST. Domestic rent is the provision of goods as a service and would therefore attract GST. The electrician would be the supply of both goods and services, so of course would attract GST. Stamp duty is a tax in itself, and not the supply of either goods or services, and therefore would be out of scope of the GST. Education is likely to be the provision of both goods, that is, the learning resources, and services, that is, the teaching, so would attract the GST. Bank charges is for the service provided by the bank, so would attract GST. Interest paid is for a service, that is, money provided to us for a fee, so would attract the GST. Interest received is for a service where we have provided the use of our money for a fee, so it would attract GST. Fresh food is a supply of goods, so of course would attract GST. Now, let's place GST codes against each item to show how these would be recorded in our accounting system. Again, assuming that there were no GST exemptions on the supply of any goods or services. What we will seek to discover is how these GST codes will change based on that GST Act of 1999. But before we do that, we first need to understand a little about Goods and Services Act 1999. Chapter 2 and Subdivision 9.5 explains that a taxable supply is something supplied in Australia by a business that is GST registered or is required to be GST registered for payment or exchange. Items listed in the Act as being input taxed or GST free are not taxable supplies. Subdivision 9-10 identifies the meaning of supplies as goods and services. Our next step is to understand the meaning of input taxed and how this works within the goods and services tax system. Purchases can be input taxed and sales can be input taxed. Whether or not a purchase is input taxed is dependent on whether or not it has a relationship to the input taxed sale. An input taxed sale is decided by the GST Act of 1999. A listing of supplies that are input tax can be found in Chapter 3, Division 40, which contains 6 basic items. When an input taxed supply is made, no GST is charged, and a tax code of ITS, input taxed supply, is used, which is zero tax. If there is a purchase of goods or services that will contribute to the input taxed goods or services that we've just supplied, then that purchase also becomes an input taxed purchase. This will mean that any GST charged by the supplier cannot be claimed back, and therefore, when we enter the supplier's invoice into our accounts, we will code it ITP, Input Taxed Purchase, again at 0% tax. Now, let's place this into context by using a real example. Assume we have a business that rents residential properties. We rent this property for $300 per week. When we create the sales invoice, the charge on our invoice will be $300 with a tax code of ITS, which is a 0% tax code if no tax is charged. Our tenant pays the rent, which from their perspective is GST free. Now, let's assume that I needed to engage an electrician to rectify an electrical problem in this home. The electrician will go to the rental property, perform the tasks required, and then will send me an invoice. The invoice I receive from the electrician will charge me GST. However, I will code this invoice ITP, which is a 0% tax code, so no tax is claimed on this purchase. The electrician's invoice will look like this one at the top. And assuming we pay on a cash rather than credit basis, the entry that I make into my accounts will look like this at the bottom. It is the sale item that will determine whether or not it and any related purchases should be treated as input taxed. This is determined by the list of items that are identified as being input taxed in the Goods and Services Tax Act 1999. Any purchase that contributes to that input taxed supply also becomes input taxed. Because there is no tax charged on that supply, the GST paid on any purchase contributing to that supply cannot be claimed back. The next step is to understand a GST-free supply and what makes it different to an input tax supply. Because again, no tax is charged on that supply in the same way as is the case with input tax goods. But what makes this different is an input tax supply is that when making a purchase from a supplier, regardless of whether the purchase contributes to that supply, the tax paid can be claimed back on the next BAS statement. Okay, so now let's return to our tax code discussion and see how these tax codes change based on these exemptions under the GST Act and the reporting requirements for the BAS statement. Remember that if we had a GST system without any exemptions, this is how we would see the GST coding. We will now see how these codes change under the GST system. The first item is a transfer of cash. This could be a transfer from the bank account to petty cash. It could be a transfer from one bank account to another bank account. It could be a transfer of cash from my account to a supplier's account, or a payment of a loan. There is no supply of goods or services within the transaction, so therefore it is outside the scope of the GST, and as such, we do not want it reported on the BAS statement. Therefore, we will code it with NT, or non-taxable. Let's drop down to superannuation. This is not a supply of goods or services either, which means that we do not want it reported on the BAS statement. Therefore, we will code it with NT, or non-taxable. When we consider the issue of stamp duty, we know this is a tax, and not the supply of goods or services, which means that we do not want it reported on the BAS statement. Therefore, we'll code this also with NT, or non-taxable. Moving back to the purchase of a photocopier, we recognise this is the provision of goods and would normally be given a GST code. The reporting requirements stipulate that purchases of capital items must be reported at G10 on the business activity statement. So to do this, we create a CAP tax code, so it can be reported separately to the other taxable purchases. Advertising is principally the provision of a service, though it may include products as well. There are no exemptions for this under the GST Act, and no requirements to report this separately on the BAS, so the tax code will remain GST and is reported at G11. Domestic rent is the provision of a service. However, this service is listed as an input taxed item under the GST Act, which means that it is free of GST. There is a requirement to report it separately on the BAS under G4. So to be able to do this, we give it a separate zero tax code of ITS, or Input Taxed Supply. This is reported at both G1 and G4. Products and services from an electrician are taxable, and the services supplied here have been charged, including GST. But because this is a contribution to an input taxed supply, it means that while we have paid tax on the electrician's invoice, the tax paid cannot be claimed back. There is a requirement to report it separately on the BAS under G13. So to be able to do this, we give it a separate zero tax code of ITP, Input Taxed Purchase. This is reported at both G11 and G13. Education is the provision of a service. However, this service is listed as a GST-free item under the GST Act, which means that no tax is applied. There is a requirement to report it separately on the BAS under G3 if it is a sale item, and G14 if it is a purchase item. To be able to do this, we give it a separate zero tax code of FRE. For a sale, this is reported at both G1 and G3, and for a purchase item, this is reported at both G11 and G14. Bank charges are a service that is provided by the bank. We now need to see this transaction from two sides: the financial services institution side and then our side. As the financial service institution is applying the charge, so for them the code would be ITS. But from our side, we are simply seeing a GST-free charge. This is not a contribution to any input tax supply that we are making, so it is not an input tax purchase for us. As a payment we are making that has no tax, we are required to report this separately on the BAS. To be able to do this, we give it a separate zero tax code of FRE. This is reported at both G11 and G14. Interest paid is also a charge applied by a financial services institution and is the provision of a service. Financial services are listed as input taxed items under the GST Act, which means that it is free of GST. The same applies to this item as was applied to bank charges, and is coded FRE and also reported at G11 and G14. Interest received places us as the provider of the input taxed service. In the same way as the domestic rent, we are making the supply, and as such, this is reported on the BAS using the tax code ITS and reported at G1 and G4. Fresh food is the provision of goods. However, this service is listed as a GST-free item under the GST Act, which means that no tax is applied. There is a requirement to report it separately on the BAS under G3 if it is a sale item, and G14 if it is a purchase item. To be able to do this, we give it a separate zero tax code of FRE. For a sale, this is reported at both G1 and G3. For a purchase item, this is reported at both G11 and G14. The first thing that you will notice is that at no time did any NT code change to any other code. It remained as an NT code throughout. The second thing that you'll notice is that at no time did any GST code change to an NT code. It either stayed as a GST code or it changed to a different code to accommodate the reporting requirements of the BAS. The importance of understanding the concepts shown here in this video cannot be overstated. To provide a competent bookkeeping and BAS service requires you to understand how to code your entries, and that understanding comes from the understanding of the GST Act and the BAS reporting requirements. Other tax codes that we will use for reporting will be NOA, where a business supplier is not registered with an Australian business number or ABN, and will be taxed at the rate of 46.5% of the invoice total. Tax deducted in this way will need to be forwarded to the tax department on the next BAS statement. Where a business is ABN registered, but is not registered for GST, we use a code on this entry into our accounts of ANR, which stands for ABN but not GST registered. Now what I'd like to do now is provide you with a few self-assessment questions to assist you to determine how much of this information you have absorbed and whether or not you need to watch this video again.